What's good, YouTube? In this video, I'm going to share with you exactly how I pulled $20,000 in 24 hours trading penny stocks. I'm going to share with you the ultimate penny stock tutorial. I'm working on a mini course and I'm going to share with you the only lesson I have on penny stocks here on YouTube. So enjoy, and as always, before you finish this video, you know what to do. Ladies and gentlemen, let us get into this course lesson. Now, what I'm sharing with you here, now of course you have to understand trading is always going to be risky regardless of the style of trading you're going to kind of use. If you go the day trading route, you have control over your positions always, so you can close them whenever you want. If you go the swing trading route, well, you could see your account up 10% pre-market or after hours, or 10% down. Okay, and it depends what you're trading, whether you're trading high cap stocks or low cap stocks. So I'm going to share with you two ways. Now, the first way is finding penny stocks before they gap up. That's one thing we're going to use here. And the second way is looking at oversold plays or focusing only on one stock. And of course, this is also sector. So let me just share with you before we begin some motivation. If we go to my chat room, this here is a trade I took on, well, yes, last week. And by the time you watch this video, it will probably be weeks. But ABV Pharmaceutical, this is a penny stock. After hours, this is what I was down, $24,000, because I had 100,000 invested, or 128,000 or 100,000 shares. So this is like a penny stock. Okay, so I was down 24,000. This is the risk. And the next day, I was up 19,000. So I didn't close this 24,000, and I ended up with 19,000 profit, 15%. So that was a 20-cent move. Okay, so if we go here to the Patreon, this is a Bitcoin stock. So this is $13,000 profit. And of course, this is something I've shared with the team before it happened. Okay, so all in all, this was all in a week's work basically, but it caused a lot of headache because doubt comes about when you're swing trading. Always you will doubt your trades when you're swing trading, and that's the risk. When you're doubting your trades, you're stressing. Now look, I'm focusing more on emotions here because trading is simple, right? If you're a robot, you probably do great, but you're not. You're human. Okay, so let's go back and let's talk about what we're gonna do. I'm gonna share with you and teach you here. So we're going to go ahead and find them penny stocks before they gap up and short squeezes. This is exactly the play that I just shared with you here on this chat room. That net is basically pulled 19,000, 15%. Okay, that is the same exact play, and this isn't something one time. I've done this before. A lot of you who follow me from years ago, you've seen me trade penny stocks before. So this isn't new. Okay, so here's what we're going to cover. We're going to examine the company's pipeline. Now, pipeline to you guys is something new, but pipeline is a term pharmaceutical companies use when they're sharing with investors what drugs they are testing. All pharmaceutical companies that are under $5 do not have a product. They're in the testing stage. There's 30 to 40 employees, right? And they're just testing a bunch of drugs for specific, diseases and illnesses. And every time there's data that comes out, the stock shoots up on value, okay? Or they strike a deal. In the case of ABVC, which is this stock here, ABVC, this was a deal to outsource their product, which doesn't even exist. So I'll tell it to you straight away. The penny stocks are all a scam. 50 to maybe 70, 80% will fail. Okay? But they will make us money short term. And that's all we care about. And I want you to understand this. When I entered this trade and I put $130,000, I placed it because I was trading. I didn't invest in the company. I don't care about the company. I knew this was a scam. Okay? I just knew there was momentum and volume, which is the next things we're going to cover here and examine. So your job here is only to examine what's happening. Okay? So we're going to examine the company's pipeline. If there is a pipeline then we know data will be released for the company. What does data do? Data causes fluctuation in the price, either up or down. But majority of these penny stocks under $1 are actually looking to get back above $1 to get with the Nasdaq's rules and regulations. So the CEOs and the people behind it are forced to put out positive news, even if they have to manufacture the news, right? Because it's under $1. By the Nasdaq's rules, if you're listed on the stock exchange, you have to keep your stock over $1 for consistently for 30 days. So that's why stocks under $1 are somewhat risky, but they're also hot. The risk is they can get delisted eventually. But they're hot because, well, they have to get over $1, so they have to release data. So we're going to examine this specific stock, ABVC, and we're going to talk about it in more details. Now, it doesn't mean you have to focus on this. You can focus on other stocks. Okay, this is just something I already traded. But there's millions probably of penny stocks out there. The next thing we're going to do is examine the float of the stock. Because a pipeline is one thing. Pipeline is just the catalysts, potential catalysts. Okay? Examine the float of the stock. We need to see that this stock has limited supply. Okay? Because if there's limited supply, as the volume picks up on the hot news, it causes the stock to shoot up on value. Then we're going to examine the short interest. This is something we'll discuss soon. Short interest is how many people are short in this stock, i.e. doesn't have a lot of people short in it. Because if you get a catalyst, it will cause the float to shrink because everybody's buying. And these people who short it will be put under pressure because now they're under heavy losses. So they'll be forced to close their position and buy back the stock, causing the float to get even more shrinked, you could say, or limited to a point where now everybody has bought the entire shares of the company, and the new guys that come in wanting to buy, it will of course cause the price to 100x to 200x. You understand? But we'll discuss all of that. Now we're going to examine whether they have issued shares previously. Okay, when a company issues shares, it actually injects more supply into the outstanding shares. So we don't want that. Traders hate that. They hate to see a company inject more shares or issue more shares, and that causes the supply to increase. And then we're going to examine the volume. All of these are great. Volume is very important. We want to see what is the average volume daily. Okay, so let's go to Yahoo Finance. This is what I use actually when I'm analyzing. Yahoo Finance. So you can see a list of penny stocks here. These are all pharmaceuticals. You can see 28%, 50%, 7%, 16%. You only get these numbers with penny stocks, but there is a risk involved, of course. So ABVC. Okay, we're going to examine ABVC right now. And the first thing we said we want to do is check the pipeline of this stock. So I want to get the name of the company. Okay, and I want to go to over here. And I want to go to their website. Okay, now I just want to go back here. ABVC is a clinical stage biopharmaceutical company with an active pipeline of 6 drugs. An active pipeline doesn't mean they have 6 drugs. Okay? It's just testing phase. This is clinical stage. This isn't pre or post-clinical. So clinical stage is just them testing. Usually clinical stage company has more reasons to increase in value because they put out news, okay? So let's go to company's website. This is the company's website, and you can actually go to product pipeline here. And when investors invest in this, they're not really investing in it for the future. They just want to put their money, wait for some positive news to come out that they're actually about to develop a drug, and then they'll sell. So I don't want you falling in love with these. So, product development pipeline. Here's what they have. They've got a medical device and new drugs. So, here's major depressive disorder, attention deficit, depression of cancer, triple negative breast cancer, non-small cell lung cancer. Preclinical. Okay? 1, 2, 3, 4. 4 are preclinical. So they haven't even entered phase 1. So there is catalysts here, potential. There is phase 1 catalyst, phase 2 catalyst, phase 3 catalyst. The more pipelines they have, the more traders will anticipate positive news to come out. Okay, so preclinical, major depressive. This is now phase 3. So this is great. This is now leading up to phase 3, and then after that, FDA approval. Okay? And every stage, as they enter phase 1, they have to release data. When they release data, it causes the stock, well, to do this. Okay? See this? This was 300% increase in one day. And then what happened? It dumped. Of course, people want to liquidate. Whoever bought here, they want to get out and take their 100% and bounce. If they put 10,000, now they made 20,000 in one trade. And this was at 80 cents. Okay, and if we read what happened that caused this, it wasn't even data. And I want to show you how scammy penny stocks are. Biopharma entered into a term sheet to license global rights of CNS drugs. A term sheet is like peanuts, right? It doesn't mean an actual agreement. Look, traders noobs seen that this is valuation of 600 million. Who cares? Who cares? If we read into it, a clinical stage biopharmaceutical company who doesn't have any drugs, okay? They're just testing like the thousands of penny stocks out there. The potential license will cover the licensed product's clinical trial. So basically, me and you just entered into agreement, right? It's not even it's just like an NDA, you could say. We signed a paper that said, yeah, you know what? I will license your drugs once you develop them, and I will pay you X and X. If of course they come out, positive, and you know what you're doing, and you have FDA approval. Okay, we will license your drugs, and we will do everything for you. But where's the drugs? Like I said, 90% of 80% to 90% will fail. Okay, so this here is just fluff. But and this is News Media Wire, so this is a press release the company released themselves. It's a press release. They send out these press releases to hype up investors because, like I said, they want to keep their drug on the market or their stock on the stock market because that's how they survive as a company. If that stock ends up being delisted, it becomes an OTC stock. Therefore, it will become very invaluable and the company shuts down. Okay, so they need to keep their stock above $1, and that's the Nasdaq's requirement or the stock market's requirement. Okay, so this is the same. It was 86 cents. The moment so they seen it 86 cents, they sent out a news release and it shut up. Now there's other stocks here that are under $1. But again, not every stock will have some news to release. So this is the risk. But majority will try to keep their stock over $1 for 30 days. Okay? So we examined the pipeline and we know now this stock has potential of releasing data. And the more data they release, the more the stock will see positivity. Most stocks will release phase 1 data to come out positive because they're in the beginning stage. As they go to phase 2, phase 3, it gets harder. Okay, so this stock here has 4 chances of releasing positive news and causing a pump in the stock. So we identified the catalyst. Now examine the float of the stock. This is the supply. The lower the float, the better. So we go to statistics. As soon as we typed in the ticker, now we go to statistics. Now we go to shares outstanding. There's 4 million shares outstanding. However, the float is what's available to be traded by the public. So us, traders, 2.6 million. That means if 2.6 million shares are bought, that's all of the float gone. And if the volume is 4 million, this is a 100% increase in this stock. Okay, so we have to also look at volume. So the float we know is good. Anything under 10 million or even 20 million float is good. Okay? The lower the float, the better. So anything under 20 million float is good for a penny stock, of course. So here is the float. Now we need to look at what's the second thing. Examine the short interest. Okay, so we need to see how many shares are short. So short percentage of shares outstanding or float is 2%. There isn't a short interest as of yet on this stock, all right? So this here is not a short squeeze play. This is just a stock you trade based on the fact that it has a low float, 2.6 million. Okay? Examine whether they have issued shares previously. This is a problem. Okay? Why would a company issue shares? To raise capital, of course. Now, what does that do to the float itself? It increases the float. If they issue 1 million shares, now the float is 3 million. Traders don't like that. You know, they just say, you know, this is going to drop. And that's why when you see shares being issued by companies, the stock ends up dropping. Okay? The stock ends up dropping significantly. So we examine the news to see if they've issued shares. Now, if they've issued shares before and you see the stock has already dropped by 10 to 20%, we can assume this fear is now gone. Okay, the stock got priced in. The price of the stock has gone priced in for that news. Let's examine the volume. Again, statistics. I believe volume can be found here. However, a volume is something you can see. Okay, average volume 3 months. 1.8 million. Average volume 10 days. 9.9 million. That's great. Okay, that's great. That means there's eyeballs watching this stock. And it's only a matter of time before it squeezes. Usually, it's best to check the volume for 2 to 3 days. Now, the volume is almost 10x of the float. Okay, 5x of the float, which is only something you can see for a penny stock. And that's great. As long as the volume is at least 3 to 2 times the float, that means there's going to be a lot of buying or selling pressure depending on the news that's about to follow. And it shows implied volatility. That means this stock is going to be volatile, of course. Okay, so now we examined the company, examined the float of the stock, the short interest, whether they have issued shares, and the volume. Now what? Well, now, guys, we know this stock has potential of squeezing. Now we just have to identify our level for support. And unfortunately, with penny stocks, if you look here, it's pump and dumps. So the support level is something we'll discuss with other segment of this. But essentially what we're looking for is the candles here. And we're looking at the support. The support for this is $1. Okay, so if we look at this candle, we see we're using the body of this. But this is something we'll cover in the NASDAQ when we're trading NASDAQ, because we can see the candles better. But essentially we're doing the same thing here. We're not using the wick, we're just using the body. So this now is at 140. This has a potential of dropping further to $1, holding that price, and then this is where we come in, buy that stock, and then wait for it to increase by another 10 to 20 cents. Okay? Of course, without even a catalyst. But if we're waiting for a catalyst, we want that 100% return. Okay, and that's essentially what we do with penny stocks. All we did was analyze it. And we found the support, And all we have to do now is decide, do we want to take that risk for that 20% increase in the price, or even 100%? Or is this something we should stay away from? My advice, if you're trading with capital you do not need, and I know it's easy to say that because we all need money, right? And even if we don't need it, then we still will feel something about it. So if you're willing to risk, then go ahead, by all means. But be aware of the risk that you could be down 20% before you see 100%. And that's the risk of trading, pharmaceutical stocks. So I hope this has helped you guys. In regards to this trade, I put 100,000 shares at 128, you can see, and the exposure was $128,000. I was down $24,000. Okay, so that's about 10 cents. Was it 10 cents? 20 cents, 25 cents. And the market closed. The next day, I woke up to $20,000 increase, which is a 20-cent increase in the stock. This was the second day of the stock running. So the second day the stock ran, i.e. it gapped up by 100%. And you see, this is not something, this is, something that we see always with this stock. It always comes out with news. The second day, this stock ran, basically. I was here. Okay. I got out at 50 cents because I bought it just around 35 or 30. And I got out at 50 cents, 150. Okay. And I took my money. Because after the pullback, there's always some kind of a recovery, which was here. And then it dumped again, waiting for further buying pressure to push again one more time. Okay, guys, and that's essentially how you trade penny stocks.